Welcome to this video on macro and market intelligence, focusing on India's FMCG stories. We'll explore why these stories are built on habits, not hype, through a portfolio of iconic brands and a consistent growth trajectory. Our analysis includes a macro and market intelligence overlay. The current macro snapshot as of April 28, 2026, shows the RBI repo rate at 5.25%, CPI inflation at 3.40%, and India's GDP for FY26E at 7.4%. This is the table of contents for the video. We will cover macro and market context, key Indian economic indicators, the RBI policy and rate trajectory, inflation and GDP trends, and global macro headwinds. We will also delve into market structure, index levels, technical views, and trading strategies, concluding with risk factors and disclaimers. The RBI's current monetary policy stance is accommodative, implying a hold or further rate cut ahead. The current repo rate is 5.25%, on hold since February 2026. The marginal standing facility rate is 5.50%, and the standing deposit facility rate is 5.00%. The chart illustrates the RBI repo rate path over time, showing a gradual decline in the rate. India's CPI inflation stood at 3.40% in March 2026. Key observations include food CPI picking up, though overall inflation remains well within the RBI's 4.0% ±2% target. India's GDP growth is forecast at a robust 7.4% for FY26E, revised up by the RBI, signaling a positive growth outlook, even as inflation is projected at 2.1%. Globally, the U.S. Fed funds rate is 4.25% to 4.50%, with a cautious easing outlook. The U.S. dollar index is weakening, hovering around 102 to 104. The INR/USD is pressured at 85 to 87. FIIs turn net sellers in H2 2025 due to rupee stress. Geopolitical tensions, like the Iran-US conflict, pose risks to oil prices and the CAD. Looking at index levels and sector performance, the Nifty 50 is bullish with a trend range of 24,300 to 24,450. The Bank Nifty, however, is bearish, trading around 56,200. Sector analysis shows auto and pharma are bullish, while banking, PSU, and energy soil are bearish. FMCG, IT/tech, and infra/capital are currently neutral or range-bound. The Bank Nifty is trading around 56,200 within key support and resistance zones. The RSI suggests a neutral zone. MACD is bearish at -704, indicating a sell signal. The PCR is at 0.84, showing a bearish lean as call writers dominate. Key resistance is around 57,000, while strong support is at 55,500. Marico's portfolio and growth story reflect a focus on hair care, edible oils, health foods, and skincare. The company has demonstrated a consistent double-digit revenue CAGR and robust free cash flow. Macro tailwinds like RBI rate cuts and benign inflation provide a positive environment for rural consumption and household budgets. However, INR weakness and crude price volatility pose mixed to cautious implications. Key risks include geopolitical conflict, a delayed Fed pivot, INR depreciation, and potential Bank Nifty weakness. Monsoon risk and U.S. trade tariffs are also factors to monitor. The video provides a clear calendar of upcoming events and a comprehensive list of official data sources, which are Tier 1 and Tier 2 platforms, ensuring transparency.